Good evening for all those of you that are dialing in from Asia. Good morning to all of you dialing in from UK, Europe, and Middle East. My name is Deepthi Kanoria, Business Development Manager for GMG, and I will be your host and moderator for today's event. First of all, thank you for joining in on our first webinar. We hope to make this a monthly event discussing current and relevant topics in the mortgage industry, such as interest rate outlooks, changes in lending criteria, some of our case studies, as well as updates on our international mortgages in the UK, Australia, Canada, to name a few. We will try to keep this dialogue portion between 5 to 10 minutes for each webinar and leave the remaining portion for Q&A. Today's session will be a little bit longer, given it's our first one and we have quite a bit to get through. For those of you that are new to GMG, we are Asia's only overseas mortgage specialist with a primary focus on the US market. We have direct access to hundreds of lenders in the US to offer the best rates available. For today, we are excited to discuss a timely topic on the state of the US mortgage market. The coronavirus has impacted all of our lives as well as the financial markets globally, and the US mortgage market is no different. Our co-founder, Donald Clipp, will discuss how mortgage rates are determined, the current state of the mortgage market, and how he sees it evolving. Donald adds a unique viewpoint given his background in the financial markets for over 20 years. Lastly, our other co-founder, Robert Chadwick, will discuss how US citizens and foreign nationals living overseas can use a cash-out refinance to improve their liquidity. This is a very timely topic given the uncertainty in the world at the moment, and there could be no better time to take advantage of the low rates. We will conclude the call with a Q&A. Use the option Q&A on your Zoom to type in any questions that you may have, and we'll answer all of them live. Any remaining questions can be emailed to us at hello@gmg.asia. Donald, over to you.
Thanks, Difty. Hope everybody is staying safe in this phase of coronavirus. First off, to echo what Dipti said, we're super excited to start our series of webinars to discuss in detail timely and important topics relating to the mortgage industry, in particular, the US. 3 years ago, Robert and I identified a real world problem. That is, obtaining a non-resident mortgage in the US while living abroad was extremely difficult. That's as a US citizen and especially as a foreign national. And for those of you that have tried, you know what a nightmare it can be. And our goal and aim is to fix this problem. Now, before I get into the main topics of the webinar, let me quickly talk about technology ambition, because I think it's important to what we're trying to accomplish. We're developing software that chooses the best loan options from our network of lenders globally. Once the customer makes their choice, LenderHub automates the entire loan process from application to signing the closing documents. Our goal is to be able to close and fund a loan in under 20 days. And so we're about 3 to 4 months away from this launch. You can see our vision of this on YouTube if you search Global Mortgage Group. The first 55 seconds are in Korean, so don't get scared away. So with that said, let's get into the presentation. So what makes the US mortgage industry different from any other country is that nearly all mortgages are sold in the secondary market. That is, even if you go into JP Morgan Chase or Bank of America, your loan will likely end up in a government entity called Fannie Mae. Fannie Mae then packages these mortgages into mortgage-backed securities, or MBSs, and then sells them to institutions. Now, Fannie Mae was created during the Great Depression to provide liquidity to the mortgage market. At that time, the US decided the housing market, and hence mortgages, was vital to the economy, and everything must be done to ensure it runs smoothly. Fannie Mae consists of what the industry calls conforming loans. That is, a US citizen who files his taxes, has strong credit score and borrowing power, otherwise known as a prime borrower. Anything Anything other than a conforming loan, we can assume for this call, are called non-conforming loans. That is to say, loans to foreign nationals or US citizens with lack of credit. US is between 60 to 70% of all mortgage lending is underwritten by wholesale mortgage lenders. Many people don't know that. These are regulated mortgage-specific lenders who do not offer any types of customer savings or checking deposits and are the primary lenders to foreign nationals. They sell these loans in the secondary market in large pools to institutional investors, many of which are probably in your retirement funds. So why is this all important? Well, most read the headlines that the Fed fund rates are historical lows, et cetera, and think it's directly connected to mortgage rates. But in reality, it almost has no direct relationship. Mortgage rates are solely determined by what the secondary market is willing to pay for them. Now, over the last 30 days, we have seen what happens when these markets don't function properly. Specifically in the non-conforming loan area, lenders have stopped lending. Those that still lend want more and better collateral. Rates increase, loan to values being offered decline, etc. So I didn't misspeak. Loans have actually increased across the board over the last 30 days. However, there is some silver lining. The Fed's unprecedented stimulus to get the financial markets to function properly, of which buying MBSs was part of the strategy, has more or less worked over the last week or so, with conforming rates having edged down slightly. Most non-conforming lenders are still on hold, but GMG has been able to get these loans approved, and we expect our first tranche of foreign national loans to be closed and funded in the first 1 or 2 weeks of May. Now, for those of you that understand this industry, that is a monumental feat given what's happening right now. And I really have to give my applaud our processing team in the US. So how will this evolve? Well, first off, no one really knows because this is unprecedented. And there are still plenty of outsized dislocations everywhere. My personal view, and this is only personal, is that we're headed into some combination of a deeper and longer version of the 1991 recession, along with what Japan experienced in the 90s, where mortgage rates stayed lower for longer. In summary, I do expect rates to revert back to being low and hopefully and potentially lower than pre-COVID, but this won't happen until the plumbing of the financial markets functions properly. Now we're close, but we're not there yet. So I've spoken quite a bit, and I'm happy to discuss any of this at any time at your convenience over a call. In the meantime, let me turn this over to the brains of the operation, Robert Chadwick. Robert has over 20 years experience in the wholesale mortgage lending industry in the US and offers a unique perspective on how mortgages work, are underwritten, and the process involved. Robert, over to you.
Thank you, Donald. Dipti, thank you. As Donald mentioned, these are definitely unprecedented times. The way that lenders are currently looking at files is with a lot more scrutiny, whether it's the tightening of the credit requirements or if it's lowering the LTV, or even in some cases requesting the borrowers to have additional reserves. So with that being said, that doesn't really affect the GMG clientele. It's more of an affluent client. They are normally second home or investment property, and having to be able to meet the additional requirements hasn't been an issue. So I'll start with the US citizens living abroad, and then I'll go on to foreign nationals, and I'll explain the processes for each. So as a US citizen, as an expat, obviously you realize earning your income in a foreign country has its challenges in itself, and definitely getting a mortgage loan is one of them. The lack of W-2 because your company isn't required to file one. Foreign earned income, bank statements in other languages and in currencies, all create challenges. Right? You were to walk into ABC Bank in the U.S. and you gave them these your documents, they would probably not be able to help you, and not because they couldn't, but more so they just really don't know how. And that's really why GMG was started. Our programs are specific for these types of borrowers, whether it be expats or foreign nationals. What our goal is and what we're aware of is all of the lending relationships that we have, whether it's through banks or through direct lenders. We want you to have that same experience as if you were to walk into a bank in the US, without the hassles of why you don't have this and why you don't have that. So with that, and how rates have been going and what's going on with the COVID, many people have been asking, is now the time to refinance my US property? And I think the short answer is absolutely yes. No one can predict what's going to happen to mortgage lending. However, there are two facts that no one can argue. One, rates are historically low. For the US, we haven't seen rates at this level for a long time. And property values have increased significantly. So if you have a conforming loan, as Donald had mentioned, you meet the prime bank requirements. Your loan amount is below $510,000 and some change in most states, and $765,000 in some of the higher cost states and counties. Then the mortgage rate you're looking at now is in the 3 to 4% range. If you have a jumbo loan, it's just slightly above that. So, don't get me wrong, there are definitely challenges in the current situations. As an example, getting an appraisal report, as you can imagine, has become increasingly challenging with the lockdowns in the US. And everybody working from home has definitely added to the complexity, but rest assured, loans are getting funded and loans are getting closed. Getting access to liquidity at a time like this for most Americans is more important than ever. On the bright side, if there is one, COVID-19 has hit at a time when rates are low and values are high, meaning that if you do want to take advantage of being able to access the liquidity, really now is the time to do it. Whether you need funds to carry you through this event, possibly take advantage of other investments, or in a lot of cases just simply people are just lowering their interest rate. I think regardless of your situation, GMG has the experience and the knowledge, people to be able to get you through these times. We'll walk you through the application process all the way to closing. There's no need to travel to the US, providing that the embassies are open, or if we can do a power of attorney, we can definitely figure out some way to make this work for you. So that covers most of the US citizen issues. If you have any direct questions, you can message me in the chat, or you feel free to send me an email or WhatsApp. So if you're a foreign national, it is a bit more challenging now. As Donald had mentioned, there are a lot of lenders that have just strictly or kind of paused their lending. They haven't closed down, but until the secondary market opens back up, they just want to make sure that there is a demand and what the correct pricing is. Many brokers and lenders in the US have actually stopped taking loans, but GMG is still getting loans approved. We're still taking loans in. And I think what has helped us is our unique business model of only dealing with this clientele, foreign nationals and expats. So we've known and we've had these relationships with all these lenders that deal specifically with these clients for these years. And so while one maybe goes out or pauses, we always have another one that can kind of fill the challenge. So again, just like the U.S. citizens, it's not without challenges. We obviously still have appraisal issues. But if you currently have an investment property, it really is a good opportunity to look at it, because as a foreign national, we can still do cash out up to 70%. You don't have to have prior mortgage history, meaning that if you paid cash for the property, you can get a mortgage on it. You don't need U.S. credit, and we don't do a deep dive into your financials, which makes the process actually quite streamlined, as Donald was mentioning. So our foreign national loans are strictly LTV driven, meaning that the lower the rate, or the lower the LTV, the lower the rate. But currently, even with the liquidity crisis on the secondary market, based on our relationships with various lenders, we're still looking we're actually approving and funding loans in the 4% range, which, to put it in perspective, this is slightly above U.S. citizen rates. And if to push my point even more, these rates this is pre-COVID, about a year and a half ago, were 6 to 7%. So you're looking, even though it's difficult to push a loan through, but it's still possible, and you really should try to take advantage of it if you're in that need. So in closing, I think we are constantly abreast with the changing landscape of our lenders, and we're navigating through these challenging times with them and with you. But I can assure you, we're still accepting applications and we're still getting loans approved. So thank you for your time, and stay safe, everyone. And if you have any questions, you can put them into the chat, and we, both Donald and myself and Dipti, are happy to answer for you. So thank you. Okay, it looks like there are several questions.
Yeah.
Should I take the first one?
Sure.
So the question is, I guess we won't read who this sent it, but it's a long question. There's a discussion in the news around mortgage services. I think this is Fannie and Freddie, potentially needing a bailout if COVID-19 continues to disturb the market. What exactly is the issue for the mortgage servicers? This is an inability to sell the MBS in the market and get mortgages off their books. And is there indication of the US and government willing to support them? Okay, so this is a pretty complicated question and an equally complicated answer. But I would say, first off, that what they're referring to when you read in the news is not Fannie and Freddie. They're typically lenders, wholesale lenders that take on the servicing element to a loan even after they sell these mortgages. So this hasn't, I think the second part of the question is where will the government support them or any indication thereof? It's too early to tell. Obviously, right now, the focus for the government is to make sure that everything works properly first, because if things don't work properly, then you can't really address problems specifically. That revolves around the repo rates, interbank markets, swap lines, and of course, MBSs. So I guess it's kind of a long way to answer the fact, and also the second part of the question is, what exactly is the issue? Well, I think your question is correct in that these lenders, they are not able to sell these loans in the secondary market. They could be in the form of a note or an MBS. So the lenders that we've worked with, a lot of, they've either kept their existing obligations and not added more. So that tends to be the common trend. And we have, other lenders that are still lending. It really depends on kind of the secondary market strength that they're selling to. I hope that answered the question. And the client that sent me the question, I'll contact you directly if you want a longer answer.
Okay, so we have another question. It says, what solution are banks providing to allow valuations to go ahead? Excellent question. That's still a little bit up in the air. There is talk about doing just purely desktop valuations, but that hasn't been clarified. For the non-QM lenders, so foreign nationals, it's actually a bit more difficult because they don't have the guarantees that the Fannie Mae loans have. So we are still getting appraisals done. It's just actually taking a lot more time. So we have another question. What is the situation with property with no current debt? Is a cash out possible? Also, what price of property is relevant for your service? What price of property? So not having a mortgage is actually quite common for our clients, especially if you were to take the investors out of China. A lot of them have paid cash for their properties. Getting a mortgage for our foreign national mortgage programs, they don't require you to have a mortgage in the past. They don't require you to have U.S. credit and residency. So with that said, getting a mortgage is definitely possible. It's going to be possibly restricted in LTV now, but if you have no mortgage, that shouldn't be an issue. So another question is, what makes GMG different from a bank? Also, what do you expect will happen rates in the future further down this year and beyond? I think like most mortgage brokers, what makes GMG different is if you were to walk into Citibank, for example, Citibank only has their programs to show you. They're no longer able to broker programs. What makes a broker quite unique is, especially in these challenging times, for example, Chase has increased their FICO requirement for U.S. citizens, but Wells Fargo has not. So we have that opportunity to be able to compare and get the best options for you. So, what do I think is going to happen with rates? I wish I knew. My personal opinion is I think they'll go lower. I think once we've come out of this, it's going to be a driving force for the economy. So that's waiting to be seen, though, of course. Can a U.S. citizen without credit get a loan with a jumbo loan? Absolutely. I would say the average loan size that we have for the U.S. citizens is over 500,000. So that's just right at the jumbo level. You can get it. It is just a bit more challenging, and you wouldn't be able to get a standard bank loan. We would have to put you into a non-QM program. But we do have non-QM programs that would treat you and look at you actually as a foreign national. So how does a U.S. mortgage term coincide with the borrower's age? It's funny because this is actually a question that we get quite often. In the U.S., it is illegal to discriminate against age, sex, marital status, religion, and with that, even a 90-year-old man can get a 30-year mortgage. So it makes the amortization quite easy. So let me see.
I can take the next one. To give you a break, Robert.
Thanks.
It says, how do you, hold on, I need my glasses. How can you qualify if your income is overseas? Well, actually, that's another good question. So we get this a lot, and I think it's a deterrent for a lot of folks who want a U.S. mortgage to actually do the work to look for lenders to do so, because they just assume that, I'm earning my income in Hong Kong or Singapore or in the UK, the banks won't accept it. Well, that actually is true in some cases. But what Robert and I have been able to do is we've worked with these lenders over the past 3 years to create loan programs specifically for the requirements for various nationalities in Asia. Every country has its own idiosyncrasies. Hong Kong doesn't have any zip codes. Certain countries don't have reference letters available, whatever it is. We've been able to address that. So we are able to use foreign income. So that's a good question, and I can reply directly back to you with a longer answer after this call.
Okay, so another question is, for closing, how do you handle signatures when the notary service and the U.S. consulate are closed? That's another good question. It's difficult because until that's open, And until the travel bans are lifted, then there's really no way to sign closing documents. It requires a wet signature. Now, will this change if things in the U.S. progress? It's possible, but for what it is right now, we'll need to wait until either the embassies are open or the travel restriction is lifted. So.
And I'd like to add to that, and to Robert, if I could, is that we normally suggest, and in fact, most of our loans are actually done using a power of attorney. It makes things just a little easier. So a lot of folks in Asia or anywhere in the world that are buying a property in the U.S., they generally have a family member, a relative, or a friend, or maybe an accountant in that city that can help them, sign on behalf of them.
Okay, so is there a difference between the underlying circumstances around the 2008 financial crisis and the Lehman Brothers situation and now? Yeah, I mean, Donald, maybe you might be a little bit more.
Yeah, I guess, I mean, listen, so the difference is that back then, so it's good, there's some pros and cons. Back then, the event was a financial event. It was, there was over leverage, there was some fraud in the industry. I think it's well documented. The onus of the mortgage liabilities was sitting in Fannie Mae and Freddie Mac, and since then it's been highly regulated and very transparent. But back then, the government bailed out Bear Stearns, but when it came to Lehman Brothers, they just drew a line in the sand and said, well, that's it. But it was a quick rebound, and that event was really focused around the financial markets. I think what's different this time is that there are more tools available that the government has to use. They're more sophisticated. Two, obviously this is affecting the average Joe a little bit more. Restaurants are closed and airlines aren't working properly. But the stimulus is significantly more now than it was then. Back then it was 50 billion a week to a month, and now it's 50 billion a day. So, luckily for all of us, the U.S. has, a large war chest and a lot of tools that it could use to kind of keep things functioning properly. And I think they've done a good job of that. In fact, it's been significantly better than I expect. I think we all see the financial markets kind of operating a lot better than, headline economic data.
So I think that appears to be all the questions, unless I'm missing something.
Yeah, we got a lot of questions.
Yeah, and anything that you would like to ask privately, you can always email or WhatsApp as well. So thank you, everybody, and Donald or Dipti, if you have anything else you want to add.
No, just thank you for your support, everyone, and thank you for joining in on our first webinar. We really appreciate it, and I hope you found it useful, and you'll join us for our upcoming webinars. So if you have any questions, you can visit our website at www.gmg.asia. And if you have anything that you want to ask us, you can email us at hello@gmg.asia. But thank you, everyone.
Yeah, thank you. Bye-bye.
Bye-bye. Bye-bye. Thank you.